Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. So stay tuned today to hear about how the Labour Party's federal election win could affect the Australian property market. The Australian Labour Party's recent win in the federal election marks a continuation of its policy platform focused on affordable housing, climate investment, social infrastructure and economic reform. At the same time, global uncertainty, particularly in the forms of Trump, his proposed tariffs, adds external volatility to a situation that property investors just can't ignore. So given the Trump factor, it is no wonder that Australia voted for perceived stability in an unstable world. Let's be honest, Peter Dutton never really stood a chance. In this context, the Labor government's domestic policy agenda is expected to intersect with international pressures in ways that will shape Australia's property market across housing supply, buyer demand and taxation, and of course, affordability. So let's have a look at some of the positive impacts on the property market. Labor has committed to increasing housing supply through programs like the Housing Australia Future Fund and Help to Buy shared equity scheme, aiming to make it easier for first home buyers to enter the market. This could stimulate development in the medium to long term. Government-backed schemes may support price stability at the lower end of the market. The government is expected to maintain a strong pipeline of infrastructure projects, including transport, health and education, which historically supports regional and suburban property growth. Areas earmarked for infrastructure upgrades may see increased investor and homebuyer interest. Unlike previous elections, Labor has avoided proposal for drastic tax reform on property, like changes to negative gearing or capital gains tax, offering investors greater policy certainty than in the past. This is likely to be viewed positively by landlords and developers seeking consistency. Incentives for energy-efficient housing and emissions reduction may push developers towards greener builds, potentially increasing long-term property value and tenant appeal for sustainable dwellings. And now let's have a little look at the potential risks or challenges for investors. Despite housing initiatives, Labor's policies do not immediately solve the construction industry's struggle with labour shortages, material cost inflation, now of course intensified by global tariffs, and builder insolvencies. Short-term housing supply is unlikely to improve quickly. Shared equity schemes and grants could inflate demand in certain markets, potentially pushing up prices further without a proportional increase in supply. This could lead to competition and price pressure in some entry-level segments. There's nothing new there, that's been happening for the last 24 months at least. While tenancy law changes are mostly state-based, Labor's alignment with progressive rental reforms like rent caps, no ground evictions in some jurisdictions could lead to heightened compliance costs or investor hesitation in those markets. Labor's significant investment in infrastructure, health and climate programs could keep upward pressure on inflation. If inflation persists, interest rates may stay higher for longer, limiting borrowing capacity and buyer demand. So what should property investors watch out for? The Labor government's re-election offers a mix of stability and opportunity for the Australian property market. Its focus on housing affordability, infrastructure development and sustainability creates a supportive long-term environment, especially for well-located investments aligned with public spending. But short-term headwinds remain. These include construction bottlenecks, rental regulation uncertainty, and the broader effects of global trade disruption, most notably, of course, from Trump's tariff agenda, which threatens to increase building costs and suppress consumer confidence. For investors, the key will be to stay nimble, choosing locations aligned with infrastructure upgrades, monitoring policy rollouts really carefully and factoring in domestic reforms and international risks while you are all planning your next move. I will keep you posted on all things property from around Australia. Don't forget to hit the like and subscribe button if you're enjoying the free content, and I will see you all again really soon. Bye.